gold stocks are under huge pressure. The GDX, the GDXJ have been getting absolutely crushed the last 3-4 trading days. And the US dollar, there's a major rush to safety right now. But
nobody cares about gold stocks. You told me to buy gold stocks. Gold at 1800. You told me to buy gold stocks. Highly inflationary environment. I'm screwed. I'm down 20% in a week. What are you going to say for yourself? First show, first podcast. Alex and I, we wanted to start this podcast and intend to do it more frequently to react to kind of the market news a little more quickly. I think a lot of people don't realize or may not realize with Pinnacle, it takes a long time, many man hours and several days to put together a newsletter. And sometimes because it takes that kind of time, the info that we're providing is a bit late. So we felt this is a great venue to open up and start talking markets and small caps, and particularly in Canada. So let's do this, Alex. Let's jump into it. There's a lot going on. Sentiment's probably the worst it's been, at least in the small and micro cap markets since right before COVID.
Yeah. The COVID crash for sure. But yeah, we've seen a huge change in sentiment. Risk capital is fleeing this market at a rate I haven't seen maybe since we've been in the business, 17 years. Volumes are off 60, 65%. Financings are off, 50%. Risk capital is moving to the sidelines.
I think one of the concerning things, the most concerning thing that I'm seeing, particularly from the micro and the small caps in Canada, is the dramatic decrease in funding for venture companies.
Yeah. And we've been writing about this for months. I mean, the venture's off 8-9% in the last 5 trading days. It's in free fall at the moment, but we've seen this coming, right? I mean, last year was a record year for the venture in terms of financings. It was averaging.
I'll be honest.
Yeah.
I did not see this coming. I was very bullish, or at least quite bullish, around Christmas time. Yeah. I thought we would. I mean, I wrote a piece about it. It's, I look like a moron now because it did not pan out as I expected for the first 60 days of the year. But I was expecting a Q1.
The Christmas trade.
Yeah, I was expecting a Q1, perhaps not like Q1 2021, where it was absolutely insane. People had totally unfounded sentiment that, a lot of these small companies were going to the moon, and it was speculative fever back in Q1 2021. But I was expecting kind of a muted version of that for Q1 2022, and we saw the opposite. And we saw it across the board. It's not just the venture or the CSC. This stretches into the US as well. The Russell, which is the small cap index in the US, probably the foremost in the world for small caps, is down over 20% since November 2021. I mean, so it's in a technical bear market in a very, very short period of time, which is how small caps typically play out. When they go down quickly, and they go down hard, just the same as when they go into a bull market. Most of the gains in a bull market are made in the first 90 days of a 2 or 3 year bull market.
Yeah. But that's something to remember as this bear market gets worse. But you're right. Q1 2021 was the peak. Okay. The venture was peaking. It was flirting with 1100. It was trading over 200 million shares total per day. Everything was firing, right? Crypto.
What's
cannabis.
the volume now? What is the daily volume roughly on the venture now?
Today is one of the lowest volume days I've seen all year. I don't even know if we got to 30 million. The TMX group calculates the data in different ways. Sometimes they include the NEX exchange, which bumps it up.
Right.
But to give you an idea, I actually looked before we jumped on here. A year ago on April 26th, 2021, the venture traded 114 million shares, closed at 943. Today, we're trading around 815 on the venture. It's off almost 150 points from there. And we'll be lucky to do 30 to 40 million shares in trading. And if you look at it year to date, what's the volume on the exchange, 2021 versus 2022, Year to date, this data came out in early April, so it just includes the first 3 months of the year. Volume is off 61.5% from 27.6 billion shares in the first 3 months of 2021 to 10.6 billion shares in Q1 of 2022. 61.5% decline. Stunning.
A typical venture crash, if memory serves, is between 30 and 60% of the index's value. Okay, the TSX Venture.
Yeah.
Today, what we're seeing, which is a little bit novel, which is kind of adds to the bear argument, is the exchange is only really down
25%.
maybe 25% from its peak of last year. Okay, so historically, that's not a typical venture crash. That's a very modest correction for venture standards. So I think that lends to the argument that we have further to go. Mm-hmm. And given that there's a lack of volume on the exchange right now, quite low, if there's another shoe to drop, we could very easily, with heavy selling, very easily see the index drop below 700, in my opinion.
Yeah, I mean, to have an exchange go from March in 2009, right, to April in 2012, it ran from about 689 to 2400. It was one of the best performing exchanges in the world. And then you had a grind down to January of 2016 where it finally bottomed at 466.
Yeah, exactly.
Before going on another multi-year run.
Another thing, too, just to keep in mind is the carnage obviously isn't exclusive to the venture. The greatest growth exchange in the world, in my opinion, growth investing exchange, is the NASDAQ. And the data on the NASDAQ is pretty profound. I believe, so there's, let's say, just over 3,000 companies on the NASDAQ, roughly, I think. And Bloomberg reported that, I think, slightly over 50% of the companies on the NASDAQ are down 50% or more from their highs.
Yeah. And I believe that happened in 2000 and prior to 2008. That is the sign of a huge impending market crash. I mean, when that happens. But
where's the value then? The value is in like 20 companies.
Largely, yeah. Just like the liquidity
or the market cap.
Yeah, much like the liquidity on the TSX Venture is largely comprised in the top 20 issuers. Sometimes half the volume can be found in the top 10, 15 issuers, which is another huge warning sign for investors. Some of these small cap stocks, liquidity can literally dry up and go away. Like it can go to zero. You can buy a stock when it's, hot and trading a few 100,000 shares or a couple million shares a day. And that volume can fade in a period of months to next to nothing. And you can really be left holding the bag. So it's something to be cognizant of. I honestly believe the BOC and the Fed are going to follow through with 2 or 3 big rate hikes. And that's going to depress the markets further. I think the venture's heading sub 700. I think we're going to see a big correction, a lot of pain before it gets recapitalized and liquidity comes back to the space. Or, we need a huge discovery. We need something big to spur the markets. If the Fed were to throw in the towel, say if recession data started, coming out and they threw in the towel, reversed course, started cutting rates or injecting liquidity back into the markets, absolutely, you could see gold very quickly get above, 2000. And some of these, the mining shares lead the exchange back. But until that happens, I see downward pressure. What about you?
I'm not trying to thread a needle here, but yeah, I don't disagree that the venture has more ground to lose. I don't think it's going to be as severe. I don't think we're going to be going into the 600s. If we do, it'll be brief. I think there's maybe another 10% on the venture. Volume's so low already. It shows a lot of, in my view, seller exhaustion. Yes, it shows that there's no buyers, but I think, there's more to go. Probably 6-7%, maybe 8%. But if you look at some really compelling data, especially more south of the border in the US when it comes to small caps, Fury Research did some excellent analytic work. And they found that, so the Russell's lost 20-something% since November, which is the preeminent small cap index, probably in the world. Yeah. So it's down more than 20% in 4 or 5 months, 6 months. And 88% of the time when it has a correction of 20% or more, and this is according to Fear Research, the next 12 months, it averages roughly a 23% return. So there's some historical data to suggest that we could be in for a nice little run. I don't think it's going to happen tomorrow or anything, but in the relatively near term, I could see it. And I'm going to stay cautiously optimistic with this market.
I hope you're right. And I mean, that speaks to human nature. We know sentiment can change on a dime in this game. And we've seen it happen so many times. So I hope you're right. It's small caps. Anything can happen. That's why we love it. That's why we play the game. So we'll see.
Time will tell.